Welcome, everybody. My name is Kai Hoffmann. I'm the CEO of the Soar Financial Group. This is episode 33 of SF Live. I'm joined by Paul Benson today. He's the CEO and president of SSR Mining. Not for much longer, but he is right now. I'm going to switch over to Paul in just 1 second. Just a quick reminder, you've seen the button come up already. Make sure to subscribe to our YouTube channel. Make sure to follow us here on Twitter. Use hashtag AskSSRM for your questions during our live conversation with Paul. And we'll get to those at the end of our quick chat bit here. And now I have the honor and the pleasure to switch over to Mr. Paul Benson. Paul, thank you for joining us. I know it's busy times right now. How are you doing?
Yeah, no, very well. And thanks for having me.
Oh, pleasure. I think it's really timely, and you just announced the merger last week, so I'm really excited to have you on. I'm sure you get lots of phone calls and stuff to do besides chatting with us. But let's dive right in. The merger with Alacer Gold, creating a new $4 billion US. I don't even know what's in Canadian dollars, probably a couple trillion or something. I don't know. But that's caused quite a stir in the market, and we need to dive into those details. But before we talk about the deal itself, how has COVID impacted the deal-making process? I'm quite curious about that.
Yeah, we were very lucky in terms of timing. So we started discussions back in November last year. That was CEO to CEO. January, we brought the chairman in. And so at that point, we agreed that we'd sign CA, look at technical data. We then organised site visits, and that was key. Our team, including me and the chairman, went across to Turkey. We left BMO and avoided PDAC, so we didn't go to PDAC this year. So as it was starting to get headlines then, but we were back in country before really anything happened, and they'd been to our sites as well. So through pure good luck, we managed to get the physical site visits in before the lockdown, and then obviously continued with data access after that. But yeah, I think good luck more than good planning, but you always take luck when you get it.
No, that's a really interesting short time period. When you started talking in November, you had Christmas and the break and everything, of course, and then you come to a decision mid-February pretty much, because you sort of knew where it was going even before you do the site visits, obviously, because you do some planning, right? So still a fairly short time frame.
We hadn't agreed that the deal would go ahead. By February, what we'd agreed is that based on the public domain information, we knew enough about each other to say, theoretically, if what we see on the ground and what we see in due diligence stacks up, then yes, we can make this work. But really, it was only 2 weeks ago that we got to the finish line and saying, yep, we both want to press the button.
Yeah, I was exchanging emails with your VP of IR, Michael, here, and I was like, he was working over the COVID weekend. I was like, oh, I felt sorry for him. So those deals always take a lot of time and are stressful, right? So let's talk about the deal terms themselves. Do you want to run us through those?
Sure. So this is a zero premium merger of equals, and that to me is the most important thing. We've all seen through the history of mining that there's fantastic value destruction for shareholders of the takeover the company doing the takeover when they offer a large premium. So part of the discussion we had early on, this will only work if zero premium, and that if there's not a large movement of value from one to another. So this is a relative valuation exercise that we looked at in part. So the relative PNAVs of the two companies, price to NAV, was approximately similar, which I think is great. The deals where you see a big premium, normally it evaporates on day one as the hedge funds come in and short the company doing the takeover and go long the target. And so shareholders don't benefit, but you're issuing more shares. So that was key. And we were keeping an eye from early January on each other's share prices, and luckily, although there were a few divergences, they went more or less in line, and so there was that still good parity between the two companies. Obviously, if one had diverged up or down at the time, we couldn't have pressed the go button, but pleasingly, we finished around the same place. So based on the two market caps at the time, the shareholder split will issue shares to Alacer shareholders, and it'll end up being 57 SSR, 43 Alacer shareholders. So in terms of the actual mechanism, we'll give, 0.3246 SSR shares for every Alacer share.
Okay. No, that deal, one thing I wanted to get at, the feedback, and when I first saw the deal, without knowing anything about Alacer, as a company I haven't followed at all, to be honest, I was like, oh, Turkey. Interesting. So what's the feedback you've been getting on that side, on that front?
Yeah, interesting. Sort of interesting. There's a good shareholder overlap between the two companies. I think in the our top 20 shareholders have just under 50% of us, and those same shareholders have below 30% of them. The nice thing is that there are very few funds that are long in both, so there's not an issue where joining the two together they start to worry about getting too big. The only one who's big in both is the ETF, and they just follow the index. But an example, BlackRock, their largest shareholder, only has a small position in us, so joining the two isn't a worry for them. I think really what we found was that there'd be some shareholders here who, for whatever reason, don't follow Turkey closely and maybe only get, their view from some headlines they read, in the press about, company X having problems, moving their project forward. And for me, it's quite a simple process to explain. Turkey is the same as, Canada, US, Argentina, Australia is regional or provincial. Alacer's project is about 2,000 kilometres east of Istanbul, central middle eastern part of the country. Very isolated area, small village nearby, and they love it because they've got good paying jobs out of this mine. Alacer have been operating in country, or they've had a presence in country for 20 years. They've been operating the mine for 10, so they know how to do business there. So just as in the US, you couldn't build a gold mine in San Francisco Harbour, but you can in Nevada. Yeah. So once we explain that, I think there's people who understand that.
Interesting. And the political risk has been a factor at all? Like, because at a time, like 2-3 years ago, nobody would touch Turkey with a 10-foot pole.
Yeah, and during all that time, Alacer were doing incredibly well over there. It's a very pro-business government. They've done very well attracting foreign investment, from the early 2000s. So obviously the market takes it into account in different ways through higher discount rates, etc. But we're comfortable with that exposure.
Yeah, and that's why you're actually getting the premium. Like you've been ranked at a premium. You're getting the 57% of the deal. Probably because of that political risk as well.
That's not a premium. That's just the relative weightings of the market cap. So zero premium, both sides. It's just that we're a bigger company. That's why we end up with more of the shares.
No, what I meant that, because I think I looked at the combined portfolio. I think Chupler's going to make 48% of the overall production portfolio, but they're getting 43% of the deal.
Yeah.
So that's what I meant, in that regard.
No, that's all right. But think about it, that's their single asset. We have assets in our portfolio that aren't producing, but still are valuable. San Luis in Peru and Pitarrilla in Mexico, two examples. They don't produce anything at the moment. They're both development projects, but they have value.
Okay, now we're going to talk about organic growth potential, because that's one from a big one for me as well. Like where's the new SSR mining going from here, obviously. The combination is creating a beast in the market. You got 700 million US, which is over $1 billion Canadian, or roughly $1 billion Canadian in cash. What's the plan with that money? We've had that conversation on the SSR level before, but now it's 700 million.
We, BMO this year, I indicated that we were, as a standalone company, SSR, getting to the point where we would be, having the discussions at board about a capital return to shareholders. We'd got through the capital investments the last couple of years. We weren't sure whether we needed to invest more at Marigold to bring in the red dot reserves. Pleasingly, we didn't. So we were just looking at sort of a normal run rate on capital. So we were getting ready to, look at a capital return to shareholders. Similarly, Alacer, now that they've built the POX plant, they're up and running, they were also doing it. So you just say, now it's even more likely. So I think that. If you look on the announcement presentation, it's on page 8. It's pretty phenomenal. You see the two individual companies, and we move up the league table in terms of production, but we're still in that sort of three quarters of the way along. But when you look at cash flow, we're second best there, and that's really just because the margin per ounce is so high. So we are in, I think, the most enviable position in our part of the industry, best in class balance sheet to begin with. So you already start, ahead of the start line, and then cash flow generation from there on. So I think no matter what, the company will be able to have a capital return policy and fund any greenfields, internal growth options, but also perfectly positioned to look externally. And there are a couple in these sorts of deals. There are very few hard synergies, as in dollars going out the door. Really, it's just senior executives, salaries, and that as you reduce that headcount and on the board, that's real. But I think the soft synergies are more important, and one of them is the skill sets. Alacer bring the pressure oxidation, we bring the underground mining. So there isn't an ore body on the planet that we should be afraid of. In terms of historically, as a company, if anyone brought along a refractory ore body, would say, sorry, we don't know what to do with it. You have to give it to someone else. So now, anything underground, refractory, open pit, flotation, you name it, we can do it.
That's interesting. You mentioned growth potential, and you mentioned a couple of assets you got in South America. Let's talk about that first. And we're going to go. Wait, I got to ask one question first before I forget about it. You sold your shares in Silvercrest the other day. Is that included in the $700 million combined cash?
The $700 million on the Monday, the title was cash and marketable securities.
Got it.
Of which most was Silvercrest. Silvercrest is the only company we've actually gone out and bought securities in. We do have others that we've inherited when we've sold an exploration property to a junior and we've picked up their shares. So there's still some, but the majority, about 90 million Canadian, moved from marketable securities into cash.
Got it.
Yep.
Okay, cool. Let's talk about growth potential, organic growth potential. Let's talk about your assets, and you put out some exploration results this week as well. Let's talk about those.
Sure. So, probably the most exciting in terms of headline number, Marigold. Marigold's an amazing mine. If you look through our standard presentations, got a lot of history there. Marigold opened in 1989 with an 8-year mine life, and last year celebrated its 30th year of continuous production, so well outlasted the original plan. And at the beginning of this year, had a 12-year mine life. And last year, we bought the property to the south, Trenton Canyon and Buffalo Valley, and that doubled our land position. So our focus on exploration is moving further south now. When we bought it, we explained we could justify it internally purely on the oxide material. So oxide is what we process at Marigold through a dump leach operation. So our valuation was based purely on that, but we did point to the potential for sulfide or refractory gold at depth, similar that you find in Nevada. And one of the drill holes that we put out on Thursday night was like 90 meters at 5 grams refractory. That for a first lot of drilling, that's fantastic. But that part of it is a long game. I've said all the way along, we'll be happy to spend $2+ million a year for 5 years to see what's going on there. Really good exploration team down there, and what they're doing is we put a deep hole down, 1.5 kilometers of core. So that other hole I talked about was RC, reverse circulation, but the core hole really is going to be a Rosetta Stone for us to help us understand the lithology. And next we're doing is seismic, which we've never done before. And the idea of seismic is that you can look over the entire strike of the property, and by using that core to understand what each lithology looks like on the seismic, hopefully see where the really receptive formation, the Comas formation is, where it moves up and down, and then look for structures on that, which could be possible gold-bearing fluid conduits. So, a lot of good stuff there. Just worth noting that if we find anything that's refractory, the technology that Alacer brings is the process you'd use. We don't know how to do that. So great.
You just took my comment away, because I was going to say you just sort of bought that in-house, or you just got that expertise in-house, because you mentioned that like 2 minutes ago. So
pretend I didn't say it.
No, that's a great comment, because that takes a lot of people are scared of refractory ore, obviously, for obvious reasons. It's more expensive. It's more difficult to process. CapEx usually is quite expensive, but POX, or pressure oxidation, is not that bad, actually. So it works quite well.
And then we had the exploration results up at CB, which were, again, some nice grades there. The main ore body is called Santoy. A couple of years ago, we made a discovery of the what's called the gap hanging wall. It's a different zone of mineralization, about 200 meters in the hanging wall of the main ore body. And the holes we indicated in this last press release are interesting, because they're about 200 meters below where we had the last resource that we put out in February. So again, just indicating potential to extend that. So a good news story there as well.
Now, just circle back to Marigold. Like, what's the exploration project moving forward? What's the plan? Anything budgeted yet?
So this year, calendar year, we've budgeted $10 million US, which is a record for us down there. So that's a reasonable amount of money. and 80% is on oxide, both on our property and on the new property, Trenton Canyon, and 20% or $2 million is on that sulfide exploration. Now, you set those budgets at the beginning or at the end of last year. If we start to see, good results, we can obviously, with our balance sheet, accelerate that. You could easily throw a lot more money over it. The trick in exploration, it's an art more than a science in terms of how quickly should you spend. I said before, we'll spend $2 million a year on sulfide exploration for 5 years, $10 million. That's more efficient, and you get a better result than spending $10 million in 1 year. You've got to drill, interpret, figure out understand what information you're getting. But that doesn't mean you can't, increase that spend from 2 to 4 to more if you're starting to get good results.
No, it's Osisko style drilling with 26 drills is possible, but doesn't always make sense. It depends on the deposit, right? So, and interpretation of it. One point I found on your slide 3 of the investor presentation for the merger, and you put it at the bottom, and I almost think it's the main reason for the merger as well as market presence. Okay, I've had that conversation at BMO a year ago with a group and said, we're looking at maybe structuring a new deal, but it's got to be immediately ETF relevant. Okay, so like for me, market presence is probably one of the main drivers, like my perception of your merger. But like, why is it only ranked at the bottom of your chart there? Should it be at the top, or how do you perceive it?
I think every one of those you could mount an argument for putting it at the top. I think one issue is that people don't like the argument getting big growth for the sake, for size for size sake. And that used to be in the bad old days, the mantra that, someone would do a takeover and they just show the graph of production going up, but what they didn't show the graph of cost going up at the same time. So there was very little margin expansion. I think what we're talking about here is how markets are working today. And you've seen it, in sort of this run up in the gold price. The money initially of the generals goes to Barrick and Newmont. That's it. It doesn't trickle down. And then once they their valuations start to reach upper levels, then the money starts to come down. One of those stocks get, I don't want to say overvalued, but highly priced. But also as the generalists start to get more comfortable with the gold market, this time it's different. They've been burnt a couple of times in recent years, so they move further down. But you've got to be relevant. You've got to be on, be out there. So on that page before, I indicated on the page 8 where it looks at the cash flows, we move up ahead of B2, and B2 has certainly been the poster child for the Canadian market. And if we could get their PNAV rating, you'd see a continued, significant increase in our share price. So that's becoming relevant. More brokers cover us. The word gets out. I think there is certainly an argument it could have gone first.
Yeah, no, fantastic. Let's switch over to Twitter because we got quite a few questions that I wanted to ask as well. Some of them are the obvious ones, like Silvercrest, and we're going to get to that one. But also, what are your next steps? And we're going to answer that one. I've seen some of the questions already come in. So our followers or viewers can actually see the questions. You can. I'm just going to read them to you, unfortunately. But I promise there's nothing bad from what I've seen in there. So why did SSR elect to dispose of its Silvercrest shares when it did? And especially with a potential rise in precious metal prices, especially today, silver stocks have been, running. And I think Silvercrest hit a 52-week high this morning. So,
sure. So we'd always said we would, our strategy around that stake was to maximise the value for our shareholders, and we've done incredibly well out of it. Our average entry price was 391 Canadian, and we exited at 10. So didn't quite triple our money, but did well. But didn't sell at a discount to market. We'd made up our mind we were going to sell. We were just waiting for volume to come in the market. Now we sold on Thursday. If someone from your audience had emailed me Thursday and said the price is going to go up 5% Friday, I might have waited. But we don't try and pick up the daily movements in commodity prices. Our share price actually went up more than Silvercrest on Friday. So our valuation. We also still have silver exposure with Puna and Pitarrilla. So we were comfortable. We've done incredibly well out of it, but no Monday morning quarterbacking to figure out did you get the absolute best. On Friday we were at a 10-year high, not a 52-week high. So it was good.
No, it's just like I think investment-wise, you've done really, really well, and you obviously made the investment for a reason. Were you ever considering buying Silvercrest?
Yeah, our preference. That was our first strategic stake. Our preference was always to go into the project. Eric Fear, the chairman, wouldn't let us. He was in control of his destiny, and we got on incredibly well. This has been a win-win situation. Our preference was to go in at the lower level. We couldn't into the project, so we took the equity stake. We, in a way, protected them, from takeover, but we also helped lift their balance sheet. So they're now in a position to, fund that project going forward. So it was a win-win. Early on, I think, yes, we considered it, but the share price, always was running, I don't want to say ahead of itself, but it had good momentum. So, there was no room that we could see to put a premium, on top of the then share price.
Yeah, the market cap is 1.4 billion Canadian right now. It's crazy. Yeah. But good. It's like, I know Eric personally as well. I'm quite happy for him to leave a legacy there. So that's fantastic. So we've got a couple more questions in, and it's some you sort of hinted at already, or we sort of briefly spoke about. And the question is, the recent Trent and Canyon drill results came up with some significant sulfide intercepts. We talked about that. Does SSRM foresee a transition to mining sulfides on their Nevada properties in the not too distant future? We've sort of talked about that.
Yeah, and the only thing I'd qualify is never going to be in the not too distant future, which implies soon. Nothing happens in Nevada quickly. And we've got a couple of years worth of drilling on that. So, in your wildest dreams, I say that would be something 5+ years out.
And you haven't even started permitting yet, so.
Yeah. Yep.
Right. So, okay. And if so, are you considering further acquisitions in adjacent properties to Trenton Canyon / Marigold? And would you look to consolidate land close to Newmont's nearby Phoenix Mill in order to take advantage of infrastructure and potential upside in the region?
Well, we've continued to increase our land position there. We bought Marigold in 2014. We bought the adjoining property Valmy off Newmont in 2015, and then we bought Trenton Canyon and Buffalo Valley last year. And we bought some small pockets of land which were hidden in between of those as well off private shareholders. So we continue to look, but at the moment I think we've got our hands full for a few years. And remember, we've doubled our land position. Marigold's gone for 30 years on its block. No. We got 12 years just on the Marigold and Valmy reserves, and so the geologists have a few years ahead of them to roll that out.
Fantastic. So we covered Twitter. We covered some of the questions. Silvercrest obviously was a topic. Now let's talk about you personally. What are your plans moving forward? People have been excited or have asked me, like, oh, you got to ask Paul, like, what are his next steps? Can we invest in his next company? My idea was, are you becoming a fund manager after the successful investment in Silvercrest, or what are the plans?
I got a few questions on the Monday after the announcement. I didn't mention what I was doing. I thought it would come up as a question, and when no one asked a question, I thought, well, no one's interested, so it didn't matter. I didn't bother raising it. And then with a few follow-up phone calls with shareholders, they were worried, because I didn't talk about it. So from that point on, I was very clear. For me, this is important. There should be consolidation in the intermediate space. There are way too many intermediate gold companies, too many CEOs earning too much money. And I said, from our perspective, we will look for anything from MOEs right down to greenfields exploration projects. We've looked, out of the 30 or so intermediates, probably 20 we wouldn't think about, we consider there's a fatal flaw or something. But of the other 10, I've had a couple of conversations with CEOs saying, how about we consider an MOE? And generally the reply is along the lines of, fine, as long as I keep the top job, our board stays the same, the company name stays the same, and our head office doesn't move. And saying that's not a recipe for any sort of useful conversation. So when I met with Rod in November last year, and we just started to sound each other out, we agreed up front, let's have a framework that we don't have to argue about later. So CEO from one company, chairman from the other, split the board down the middle, and then pick the best management team coming out of that. Perfect. Quite early on, I formed the view that Rod was the best place to take the company forward. He could do a better job than me. Reason being is, one, he's built this technical team, and they mostly come out of Rio, who built the POX technology. But more importantly, the relationships in Turkey. They've been in country 20 years. They've been operating for 10. And in any country, those relationships through government, through communities, but importantly, they also have a joint venture partner, 20% owner of the joint venture, Chalik Holdings. He brings all of that. And he's also, he's similar background to me. He worked in a big company. He worked at Rio. I worked at BHP. Similar sort of culture and view of how you add value to mining. So I felt very comfortable that I was leaving it in safe hands. So for me, it was a matter of sort of principle and integrity to be able to say, I should be able to say, I'll step away. We shouldn't let my job get in the way of evaluating merger. A couple of shareholders said, well, are you going on the board? And I said, no, again, for a matter of principle, I wouldn't be independent. And I know the last thing a CEO needs is a former CEO sitting on the board whispering in their ear. I say that sort of the one sort of final bit for me, which is important, you've seen too many transactions where the departing CEO steals some of the furniture, in terms of a spin out or a royalty stream. I said, that's taking value from shareholders. Yeah. For me, clean exit. I will remain a shareholder. I'll be cheering from the sidelines. But Rod will be leading the company going forward, and I think that's something I can be very proud of how my part in the evolution of the company. But the company's been around for 70 years. I've been here for 5, and hopefully it'll be for another 70 after that. I'll be one name on the board. In terms of what I'm going to do next, I've always said this is probably my last exec role, and I wouldn't be a fund manager in a billion years. We were lucky with Silvercrest, so. I'm going to take a break. My wife and I, if they lift the restrictions, are going to drive from Vancouver to Fogo Island over in the east, and then we'll see what happens after that.
No, fantastic. No, that's great. That's a great note to end on, I think, as well, because we've sort of hit our time limit. We're trying to keep it around 25 minutes. So, yep. Paul, I really appreciate you coming on, clarifying a few things regarding the merger and upcoming steps for the company as well. And of course, Silvercrest has always been a big question mark. Some investors were quite happy you weren't going to bite that $1 billion chunk out of the market there. So, yep. I'd love to have you come on a fintwit panel once you're truly independent, because your market insights are fantastic. We've had great conversations in the past, so I'd love to have you come on again. Once your handcuffs are taken off, and I really appreciate you taking the time today, and please stay safe and good luck with closing the deal.
Thanks very much. Cheers. Have a good day.